Subscribe to our YouTube channel and press the bell icon to get the latest updates.
Some are calling it a seismic shift. Others are calling it disruption. Electric vehicles have in fact grabbed headlines for these reasons for months now. Any kind of business with a remote association to electric vehicles or EVs find takers today. Investing in the EV space helps companies move into a new orbit of valuations. If you find investing in the pricey direct EV plays too risky currently, you're not alone. Several EV stocks have moved to a new normal of investor euphoria. But in the meanwhile, I have turned my attention to a sector that has fetched 3% returns in the past decade. Why? We'll tell you in a bit. Hi, I'm Tanushree Banerjee, editor of Equity Masters Blue Chip Recommendation Service Stock Select. Welcome to Safe Stocks, where we discuss ideas to create and preserve wealth in the safest businesses. If you haven't subscribed to the Equity Master YouTube channel yet, please do so and click on the bell icon to get notifications from my latest videos. So coming back to the 3% return sector. Saying that the biggest players in the sector were huge underperformers in the last bull market would be an understatement. You would have been better off keeping your money in savings accounts. But don't mistake to be my attempt at bottom fishing. The sector has seen its heydays in the earlier decades. From mega IPOs to multi-bagger stocks, the sector has delivered it all until things came to a standstill. Cost overruns, regulatory bottlenecks, and bad capital allocation completely destroyed the wealth-creating ability of the players. In case you haven't guessed it yet, I am talking about India's power sector. Neither power generators, nor the distributors, nor utilities were money spinners until 3 years back. But since then, investor interest in this sector has literally exploded, all thanks to electric vehicles. Yes, the Indian power sector is witnessing investments like never before. Companies across industries are pouring in billions to add capacities in this space. Each one is trying to grab a share of the exponentially growing pie. Power sector stocks have gained between 200% to over 1000% in the past 2 years. The biggest gainer, Adani Green Energy, multiplied 15 times in this period. And what's really driving the investor interest into these stocks is their ability to provide charging infrastructure or energy storage systems for electric vehicles. Energy storage systems have seen a huge regulatory support recently. They provide clean, affordable and sustainable alternative to the traditional power generation technology. As the impact of climate crisis becomes even more apparent, energy storage systems hold the key to transitioning to a renewable fueled world. More specifically, electric mobility world. Currently, China, the US and European Union corner nearly 70% of the energy storage capacity globally. According to the International Energy Agency, India is said to have 1/3 of the installed capacities by 2040. But Indian companies with the most compelling energy storage opportunities still need adequate balance sheet strength. More importantly, the EV charging companies need to have a viable business model. Now, India's EV market in 2022 comprises 61% electric two-wheelers, 37% electric three-wheelers and light commercial vehicles, and 2% electric four-wheelers. The rest 0.2% are e-buses. To meet this demand, India will need to deploy a robust electric vehicle charging infrastructure across geographies. As per IEA, almost 90% of the chargers worldwide are private light-duty vehicle chargers in homes, apartment buildings and workplaces. Hence, it is imperative to check the economic viability of setting up charging infrastructure across geographies. Now, let's take a look at the subsidies. The minimum applicable range for availing subsidies under the FAME scheme for two-wheelers is 80 kilometers. On an average, a two-wheeler runs for 17 kilometers per day, much lower than the FAME scheme requirements. Hence, charging an e-two-wheeler outside your home and office is feasible. Since the range is lower, you don't need to charge it daily. Similarly, for private four-wheelers, the average run per day is just 32 kilometers. And for commercial four-wheelers such as cab services, it is 192 kilometers per day. These vehicles can be charged overnight at home or during the day in office complexes. The commercial ones can be charged at public parking lots, including fuel stations. Even for intraday public transport, which is buses or light commercial vehicles, large-scale public EV charging infrastructure may not be needed. The reason is that in all our metros and tier 1 or tier 2 cities, the longest bus route is not more than 170 kilometers. In the large majority of towns and cities, it is likely to be 100 kilometers. These distances are safely covered by the existing range of batteries used for commercial buses. With adequate number of charging stations, buses will be able to replace or charge their batteries at the completion of the designated route. Therefore, it is amply clear that both for two-wheelers or private four-wheelers, the majority of the commercial four-wheelers, a large-scale public EV charging infrastructure may not be needed in most cities and in the metros. And therefore, the power companies over-investing in large-scale charging infrastructure may end up being white elephants. So even as the fortunes of the power sector turn and this 3% return sector sees a gold rush in the years to come, one needs to be careful about the sustainability of such growth and the company's valuations. Having said that, the energy storage sector remains most resilient to economic and market shocks. If not EV charging stations, the energy storage capacities, especially that for green energy, will have plenty of takers in the manufacturing and infrastructure sectors. But when it comes to investing in it, don't go by the sector euphoria. Rather, be very careful about your stock selection. So when you're aware of such downside risks in the stock markets, you should be extra cautious in spotting the opportunities and picking only the best ones. Here are a few power and green energy stocks that have immense long-term potential provided they execute well, generate cash and keep their balance sheets lean. Hope you like this video. Stay tuned for more such videos on the safest and most appealing permanent wealth creating stocks. Thank you.